أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Welcome to chapter 11. We'll just jump right into it inshallah, and those who are not here can go back to the recording. Chapter 11 is about the purchasing process. So we did the revenue process in chapter 10. The next one is purchasing process. If you took AIS, it's the same as the revenue cycle, chapter 10, and then this is like the expenditure cycle. So the purchasing process and the structure of the chapter is going to be the same as chapter 10. We're going to talk about it in two parts. We're going to see what the client does, and then we're going to see what we are supposed to do as independent external auditors. So let's just jump right into it. The objective of the purchasing process is to purchase goods and services as well as assets and make payment for them. So this is what the client is supposed to do. The client's responsibility and duty and job here in this business process is to buy for their company goods and services and assets and make payments. And in this process they have several transactions, and they have number of controls. So let's see how the client goes through this process. In this purchasing process, the accounts that are affected are as follows. Number one, the purchase account. Here, the or the purchase transaction rather. Here, the client purchases something and records accounts payable. So either debiting inventory or any other asset and crediting accounts payable. And depending on whether the client is using perpetual inventory or periodic inventory, they may debit purchases or they may debit cost of goods sold. And again, this is something that you studied in the intermediate accounting class, the difference between perpetual and periodic inventory. And if you just remember that you did study that, you don't need to necessarily remember the details of the journal entries, okay, to understand this chapter. However, when you do go to audit, you have to remember all of this at once. And it will come to you. It's not, the actual audit is not a closed book exam, and you have trainers to train you. So when you go to audit, it's not going to be difficult, inshallah. After the purchase is made, right? So the accounts payable is credited in the first transaction. So you debit inventory, right? You debit, let's say, inventory or any expense, right? And you credit accounts payable when you make the purchase. When you do the cash disbursement, right, you debit accounts payable. I'm sorry, I did that wrong. It should be credit accounts payable, not AR. So when you are making the payment, you would debit accounts payable and you would credit cash. So this is when you're dispersing the cash, when you're paying the cash. And in this process, you may have some purchase returns, things that you purchase from the suppliers. And I'm talking about the client here now, right? So the client may have purchased something from the supplier, and they may return the purchase, and they may get discounts for the purchase, or they may get some allowance for the purchase. So this is also, these accounts also get affected. But just like sales returns, the purchase returns are not that many, because you can imagine from your own transactions and your own purchases that you don't return as many things as you purchase. You buy many things, but you only may end up returning a few things. All right. Okay. All right. Now the tasks and the documents and the records that the client handles. So the first document or the first step in this purchasing process is purchase requisition. What is a purchase requisition? Imagine this: the client has a regular business going on in their uh, business operations, and somebody notices a shortage in inventory, or somebody notices that something needs to be purchased, that employee sends something called a purchase requisition and completes a purchase requisition form. This is an internal document. Remember, we when we come in as auditors, we don't see the actual transactions. They have happened in the past. The only thing we have left are the documents that we can look at and see whether the transaction happened properly and it was recorded properly. So we need to understand how these transactions happen. What is the serial order? What are the activities in order that happen? And what documents are kept as a proof of those activities in that order. So the first thing is the purchase requisition. This is an internal request. Somebody inside the company requests the purchasing department for a purchase using the purchase requisition form. The second step is someone at the purchasing department preparing something called a purchase order, a PO, purchase order form. This purchase order form goes from the client to the supplier, and it has all the details that the client wants in the products that the client wants to purchase. This purchase order has all the details: how many, what model, which brand, all of these things, right? Number three is receiving of the goods. So once the purchase order is sent to the supplier ships the goods, and at the client's end, they will receive the goods. Once the truck comes, they will receive the goods, and when they receive the goods, the client prepares a receiving report. The client prepares a receiving report. Let's say the purchase order had 10 laptops. The client wanted 10 laptops, and the supplier only had 8, so they shipped 8. The receiving report will have 8 laptops because they only received 8. Okay. Now, so far we have 3 documents: purchase requisition, purchase order, and receiving report. All three of them are prepared by all three of them are prepared by the client. All three of them are prepared by the client. Very good. Once they receive the goods, the supplier sends them a bill, which is also known as an invoice. Now, the technical term for the supplier is vendor, right? Vendor. Remember this, right? So, you know, you need to know this when you look at the exam question. And if you ask me, well, my policy of asking questions, no questions. So suppliers are the vendors. So you should know this, right? I ask you to ask me many, many questions during the class, and I try to answer them many, many times, and I try to go over this so that you can take the exam uninterrupted without questions and so forth. Okay? So make sure you follow me when we are doing the class. Vendor invoice is received from the vendor or the supplier. So this document is prepared by who prepares this document? Does your client prepare this document? The vendor invoice? Anyone? The supplier prepares this invoice. Very good. The supplier prepares this invoice. The invoice is about every single order that the client has placed. The supplier or the vendor also sends something called a vendor statement, which is usually a monthly statement. It shows all the purchases made during the month by your client and all the payments made by your client during the month, right? So the invoice is for every purchase, and the vendor statement is for usually for a period, which is a month, which shows all the purchases during that month and all the payments made by your client during the month. So these two statements, these two documents in number 4 is prepared by the vendor. Now, once the bill is received, your client has to make the payment. Before the payment is uh, made, the payment has to go through approval. The payment has to go through approval. And before that approval, something called a voucher packet is prepared. a voucher packet is prepared. Now understand this very carefully. The voucher packet has three documents. The voucher packet has three documents: the purchase order, the receiving report, and the vendor invoice. Okay, almost correct. Aisha, purchase requisition is not a part. Purchase order is a part of the voucher packet. So it has three things: purchase order, receiving report, vendor invoice. Purchase order shows everything that was ordered. Receiving report shows everything that was received. Usually they are showing the same amounts and same items, right? If you usually order 10 laptops, you will receive 10 laptops. These three things are matched. So the voucher, the vendor invoice should also have a bill for 10 laptops. So if these three documents match, the payment is approved. Okay, if these three documents match, the payment is approved. If you ordered 10 and you received only 8 and the vendor invoice says 10, the client is not going to pay for 10 laptops. They're going to pay for 8 because they only received 8. Okay, so that's why this approval process is there. Once it's approved, the payment is made. Okay, once the payment is made, the payment is recorded in something called a voucher register. A voucher register. Whenever you see the word register, remember this is some type of a list. So I have a register for this class, which is list of all the students registered for this class. Okay, the voucher register lists all the vouchers, right, that were paid. Okay, all the vouchers that were paid. Okay, now remember your audit simulation that you're going to do, okay, is going to be based on, it's going to be based on the purchasing process. Okay, so it's necessary for you to understand this very well. Okay, it's necessary for you to understand this very well. Now let's look at something real quick. See this. This is an example of a voucher register. Are you seeing it? Right. So you see, it says voucher packet number, right? So this is voucher packet number, first one, 121231. This is for purchase order number 701, a purchase order amount $9,231. There is a receiving report number, and the receiving report amount is the same as you see. The purchase order amount is 9,231. Receiving report amount is 9,231, and then invoice number, which is coming from the client, 9,003, and the invoice amount is 9,231. So all of these three amounts are the same, and the vendor name is Fresh Dairy, and the amount of payment approved is 9,231. Okay, so this is the voucher register where you add any uh, voucher packet that was approved and the payment was made. Okay, okay, now this you have here. So the next thing is an AP subledger. What is an AP subsidiary ledger? AP subsidiary ledger is the accounts payable tail account that the client has for each supplier. So every single supplier has an accounts payable sub-register, sub-ledger, just like every single customer of the client has an accounts receivable subsidiary ledger. Okay, are you following? Is that clear? Okay. All right. Now, if the client was paid, if the customer, I'm sorry, the supplier, if the supplier was paid with a check, then there would be something called a check register, right? The check register, right, would have a list. The check register would have a list again of all the checks that were written. Okay. And the check register would show the details of every check that was written and paid to the suppliers for what amount, which supplier, etc., etc. Okay, list. Whenever you see the word register, it's a list, remember. And then everything, every transaction ultimately goes to the general ledger. And I showed you a general ledger, and an example of general ledger is available in Blackboard in the simulation that I posted. Okay, the simulation that I posted. Are you following so far? Is it clear? Okay, very good. All right. Now, the client has some duties that they segregate to make sure that the internal controls are working properly. Segregation of duties do two things. One is they minimize the possibility of fraud, and the other thing is what? Segregation of duties do two things. Minimize the possibility of fraud, and what else? Let me see if anybody remembers. We talked about this in the previous chapter. Right, maximize accuracy. Very good. Excellent. So minimize the possibility of fraud and maximize the accuracy. All right. Now here what we have, the first one is the purchasing process, right? The purchasing process is the process of sending the purchase order to the supplier. That is separated, that is segregated from purchase requisition, which is an internal request, and receiving when the goods come. These three are separated to minimize theft of inventory, inaccuracy in recording. So more than one department is handling this so that the accuracy is increased and fraud is minimized. The second and the third and the fourth are the invoicing process. So the payment of the invoice and the payment of the cash and the recording of the general ledger. These three are separated from the accounts payable department. The accounts payable's job, right, is to receive the invoice and record, right, the debit to accounts payable and credit to cash. So they are the ones who record that. This is separate from the approval of the invoice, the actual payment of the cash, and the final recording of all entries in the general ledger. So this is much simpler than the revenue process, if you remember, right? Okay. So far, so good. Any questions on this? Is this clear? Okay. Now we come in as auditors. So we understand what the client is supposed to do. Now, Mr. Independent or Miss Independent External Auditor will come and start the audit. The first thing is, remember the audit risk is made up of inherent risk and control risk and and quick detection risk, right? Or are you asking me, doctor, a question? Detection risk, right? This is DR is detection risk, right, Aisha? Okay. All right. Now uh, we have a couple of things that we discussed in the inherent risk, that is industry related factors, right? Anything that is in the industry of the client or in the industry of the supplier in this case as well, because sometimes the suppliers, for example, may be uh, scarce. You may not have many suppliers, and if something happens to one of the suppliers, the supply of the product will stop. So that is a risk, right? If the item comes from overseas, there is a different type of risk, right? Something happens to the country where it comes from, then it becomes a problem. So these things are inherent risks, right? That are related to the industry or location and the business. And then the second one is the misstatement detected in prior years, just like in the previous chapter. Any misstatement detected in prior years would be an inherent risk. Now, as we are going through, you can see that many things are somewhat common with chapter 10. Is that right? Are you finding that some things are overlapping, right? So this will continue to happen, and it will become easier and easier for you because many of these things apply to all of the business processes. So we are going to go through revenue process, inventory, purchasing process, um, payroll process, production process, all of these things. You will see many common themes, right? It will become easier and easier for you, inshallah, and your understanding will continue to increase. Then once we set the inherent risk, we jump into the test of controls. The test of controls, the first one we do is occurrence, where the client says, the client's management says, when they say the management assertion of occurrence is present, what do they say? What is the guarantee behind occurrence? Anyone? Everything recorded happened. Excellent, outstanding, very good. Okay. Now, the auditor's concern is the payment was recorded, but it was not made. So that's what we are worried about. How do we test that? What do we test? The first thing we do is we observe the segregation of duties, right? Is the segregation of duties properly done, right? Like the one we looked at, are these things separated? The separation would ensure higher accuracy of recording. We also ask if they do a bank reconciliation. Bank reconciliation, remember, is a comparison between what the client has recorded and what the bank has recorded. So if any one of these two parties made a mistake, then the bank reconciliation process will catch it. Okay? So this is the first management assertion that we check. Are you following so far? Then we check completeness. Completeness. What does the client guarantee under the management assertion of completeness? Everything that happened is recorded. Very good. So what are we worried about? We're worried about maybe a purchase happened and it was not recorded, unrecorded purchase. Maybe a payment happened, right? Maybe a payment happened and it is not recorded. So the completeness is everything that happened is recorded, right? Everything that is recorded happened is occurrence, and everything that happened is recorded is completeness. All right? So what do we test? We see whether the client accounts for numerical sequence of purchase orders, receiving reports, and vouchers. Do they account for that? Okay, numerical sequence of purchase orders, receiving reports, and vouchers. So what does that mean? The numerical sequence, the document that you looked at, the just a second. So here, as you see, the numerical sequence of purchase order 701, 702, 703. So there's numerical sequence, right? They are in order. Receiving report 345, 46, 47, right? And purchase order, receiving report. So these are prepared by the client, right? So we are looking at these numerical sequence. Does the client account for them? Is anything missing? Because if you have in their voucher register, for example, 701, 702, 704, what happened to 703, right? If they don't care for this numerical sequence and they're not in order and so forth, it is very easy to miss something. Are you following? So you want to know that the client does this sequential accounting of these documents. Are you following? Does that make sense? Okay, very good. Now, uh, again, segregation of recording and payment. So whoever is recording the accounts payable and payments is different from the one who's paying. Why? Because if one of them wants to do fraud, they have to convince the other one, and it's difficult to do. If one of them misses something or inaccurately records something, the other one will catch it. So segregation of duty helps. Account for numerical sequence of checks, right? Account for numerical sequence of checks, same idea, right? So if they have a list of checks that they pay, right? For example, let's take a look. It helps to look at these documents multiple times. This, gives you a real feel for what the documents look like. So here, as you see, check numbers, right? Check number 1001, 1002, 1003, and you see the people who were paid to, right? The fresh dairy, true flavors, fine sugar, pure honey. So these are the suppliers, right? And these are the checks, 1, 2, 3, 4, 5. So there is a numerical sequence. They have captured all these checks. Okay. So this, let's go back. This accounting of numerical checks. Now, who's supposed to do the accounting of the numerical checks? The client. You just want to make sure that they do that when you're checking the internal controls. You don't go into those documents and check the accuracy and all of those things. You go into those documents when? When do you go into individual documents and check the things? In which process? In which process do you actually, as an auditor, go through the documents? Come on, ladies. Tell me. No, not accuracy. Accuracy is a management assertion. We are doing test of controls. In which test do we go to the documents, individual documents? In the substantive testing, okay? In the substantive testing, right? In the substantive testing. In analytical procedure, we don't, right? Analytical procedure is just running some ratios and looking at some balances. Substantive test. Now, the substantive test will depend on how well the client does these things. So we ask them, do you keep track of the numerical sequence of the checks? Do you have segregation of duties? If they have all of these things present, that means our life becomes easier in the substantive testing. Are you following? Kaltam, are you following? Right? So lives become easier in the substantive testing if the test of controls reveal that the controls are good. If the controls are good, we are happy. It makes our lives easier. Okay? Reconciliation of daily cash disbursements and posting to AP. So now we want to know when these cash disbursements, meaning the payment were done and when it was recorded in accounts payable. If they are done daily, then the accuracy and the completeness would be high. Okay, remember, what did I say about daily? The word daily. What is daily? What is daily? Remember what I said about daily? The word daily. Did I say important? I said powerful. Very good. I said powerful, right? Powerful word, right? It's a powerful word, right? I exercise daily. I do my homework daily. I eat healthy daily. I have fruits in my diet daily, right? I post the cash disbursements into the accounts payable daily. So that's very good for you as an auditor if you find that. All right. Are you following? Are you following? Is it fun? It's too much fun. Okay, let's go. The next is authorization, right? Kaltam is crying. This is so much fun. Very good. All right. Uh, too much information, not fun. It's not too much information, is it? It's building up of information, right? On top of information. So we have authorization. It will come to you, inshallah. So we're going through these multiple times, and you can go back and listen to it slowly and make notes and study this as well. Okay. The next is authorization. We are worried about as auditors. The control for authorization is that all things that are supposed to be authorized are authorized. By the way, I know that you have midterm exams. Probably you have midterm exams today as well. Uh, who's are any of you in the auditing intermediate two exam? Do you have intermediate two exam today? Any one of you? Because I know 30 or so students are missing because they probably have another exam. And I know that you're overwhelmed, but we need to continue. And the good thing is all of this is recorded and you can go back to it, inshallah. Okay. So after this week, things will slow down a little bit and you can catch up, inshallah. The authorization assertion says that everything that is supposed to be authorized is authorized, and the auditor is worried about unauthorized purchases, purchases made without proper authorization, without proper documents, and unauthorized payments without proper voucher register, without proper voucher packet, and so forth. So what we want to test, what we want to see in their controls is the presence of purchase approval and authorized vendor list. Authorized vendor list is a list of suppliers that the client continuously buys from, right? So if they have that, that means they're buying from the right place. So they buy, let's say, milk from a particular place, they buy water from a particular place, right? If there is a presence of purchase approval and authorized vendor list, that means they have good controls. If they have presence of competitive bidding process, meaning when they choose a supplier, they have competition between the suppliers who can provide the best value, meaning the best quality and price, and they have a process of this. If that is the case, then they choose their vendors and authorize their vendors properly. So this is good control. Okay. And then the segregation of purchase approval and cash disbursement. So again, the purchase approval process is separated from the cash disbursement. If they have that, that means they have good controls when it comes to authorization. All right? Are you following? Are you following? Okay. 3 more slides, inshallah, and maybe we'll end a little bit early. I'll let you go, inshallah. The next is accuracy. The auditor is worried about inaccurate invoices and inaccurate payments. So now remember, we are in the test of controls. We want to see what does the client do to ensure accurate invoices and ensure the payments to the suppliers are accurate. So the test of controls we have to do is see the process of matching the invoice with the purchase order and receiving report. So remember the 3 documents in the voucher packet: the purchase order, the receiving report, and the invoice. These 3 documents must be matched. We want to know whether the client does that or not. If they do, they have good controls. Then we want to know, do they have daily reconciliations of vouchers to accounts payable? Meaning, if they have voucher packets that are approved, are they recorded in the accounts payable, updated in the accounts payable that day, right? Daily reconciliation of the vouchers to the accounts payable. If they do, they have good controls. If they don't, there is a 1 day delay, that is better than a 5 day delay. So you have to see what type of controls they have. Approval of amount before payment. So before every payment is made, there is an approval, right? There is an approval of the payment. If they do have that, then that's good controls. The next is cutoff. The auditor is worried about purchases and payments are recorded in the improper period. So we want to make sure that everything that happened before December 31st is recorded in this year. Everything that happened January 1st and forward is recorded in the next year. So we want to make sure that they're recorded in the right period. And our worry is they may be recorded in the wrong period. So what controls do we check? We observe the timing of the receiving report and recording. So when are the goods received, which is recorded in the receiving report, and when are they recorded as received, right, in the financial statements? If it's daily, very, very good, very powerful. If there is a 1 day delay, then it is possible that December 31st items could be recorded in January 1st. We also then observe the timing of payment and recording. So when is the payment made, actual cash payment made or payment made with a check, and when is it recorded in the financial statements? If it is done daily, then there should be no problem. If there is a delay, then there is a possibility of the item getting recorded in the improper period. Okay, this is very easy to observe because you only have to look at the last part of the year and the first part of the next year. That's where this cutoff business is. It does not involve the entire year. Okay, so far so good. You follow. The cutoff is the easiest one to test. Are you there? Are you following? Okay, one more slide, and that is classification. Transactions are classified in the right account, and this is the same as the previous chapter which you just studied. Presence and use of chart of accounts. Presence and use of chart of accounts, right? I showed you a chart of accounts before. Do you remember? Do you remember the chart of accounts, right? It has the list of all the accounts with the account numbers, and if everybody is using in the client's office the same chart of accounts to record items in different accounts, that means that they're recorded in the right place. Okay, so that's a lot of information, but I will stop here. Inshallah, I will not continue to the full length of the class. I know you're a little bit overwhelmed, but this recording is going to be there, inshallah, and you can revisit it. Okay, you can revisit it and you can ask me questions like you did before the exam. How was the exam? How did you find the exam? All of the students present here, I think, took the exam yesterday. Confusing. Oh, what else? What other adjectives do we have for the exam? Little hard. Okay. What else do we have? Hate the math part. Okay. Okay. What else? Did not do well. Hmm. Nothing good. Nothing good about the exam. Did it test what you studied? A lot of calculation. You know, chapters 8 and 9 were statistics, so you have to have some calculations there, right? Right. But did the exam make you think? Were you thinking during the exam? Were you thinking about the process? Did it make you think? Okay, I'm going to. There's Kaltham said something. Yeah, but the material was too much and could not memorize all the formulas. The material was couldn't be too much, Kaltham. You cannot do anything less for a midterm exam. Only 3 chapters, right? Only 3 chapters. And remember, this is just slightly below a master's level class. Master's level classes are 500 level, and this is an elective 400 level class. So this is a sequence you follow. You have auditing 1, and then you have auditing 2. Any sequence class, right, takes you to a higher level. Okay, so now you are becoming almost accountants, right? So if it's a child's play, right, then where is the value in becoming an accountant? Are you following? So you're near accountants, you're almost closing, getting closer to your graduation, and very soon you're going to be all accountants, inshallah. So now you're going to the next level. Are you following? Right? Okay. All right. Very good. Inshallah, I will grade the exams. Inshallah, you have done well, and I will. You will see the grades, inshallah, soon. All right. So we will stop here for the day, inshallah, and I will see you on Sunday. Okay. Assalamu alaikum wa rahmatullahi wa barakatuh.